Look, the banks and politicians are confused right now. One week they're floating 50-year mortgages around. The next week economists are calling it a horror movie for homeowners, and the whole thing starts to get walked back. Then they start talking about portable mortgages, meaning you get to take your low interest rate with you to your next house, even though our entire mortgage system in the United States is built on 30-year mortgages that get chopped up, bundled, and sold to Wall Street. Meanwhile, regular families are stuck. Sellers can't sell because they're locked in at 3% mortgage rates. Buyers can't buy because payments at today's mortgage rates are brutal, especially given the price of homes these days. And everybody is looking for some magic fix at this point. But here's the truth that nobody's going to tell you on the news. The fix already exists. It's called creative finance. And regular investors like myself have been using it for decades. So in this video, I'm going to show you why this market is built for creative finance. 5 real world strategies you can use and how to start even if you don't have perfect credit, a big W-2 or a stack of cash. Now look, I've spoken with people in the past who thought it was really hard to get their first business bank account. Well, the sponsor of this video, Baselane, provides you with that free bank account, and they make it really easy for you to get it set up. Let me show you what I'm talking about. All right, so as you can see, we're here in the Baselane dashboard. Now, again, this is just a dummy account. This is not a real account. So the information that you see in this particular account, just disregard. It's not real information. But in order to get your business bank account set up, all you got to do is scroll about halfway down the page and click on Open Bank Account. All right, now once you click on that, you go ahead and fill out the application for your business bank account. So let's just start with a simple name like ABC LLC. Let's scroll all the way down to where it says EIN number, and let's just add 1, 2, 3, 4, 5, 6, 7, 8, 9, just a fictitious number. And under entity type, all you're going to do is select the type of entity you have set up. I'm going to select LLC. Now, business vertical, I'm just going to select real estate, but this is basically the business that you're practicing and that you're opening this business bank account for. You want it to align with your selection. Now, as far as phone numbers, I'm just going to put in a fictitious phone number. We're going to leave it at 1, 2, 3, 4, 5, 6, 7, 8, 9, 9, 9. As far as year of incorporation, let's just put it down for, let's say, 2015. And then for the state of, incorporation, let's select any state that you have your business set up in. For the purposes of this video, I'm just going to go ahead and select Delaware. And as far as the street address, I'm going to go ahead and create a fictitious address for the purposes of this video. And then I'll go ahead and select continue. Now, once we click continue, it's going to ask you for your own personal information. All you want to do is get this filled out. Let me go ahead and fill that out real quick, and then I'll see you on the next page. And once you fill out all of that information, it's going to send you a verification code to the phone number that you provided to the system. All you got to do is enter the code and your account will be set up. So as you can see, it's really easy to get your business bank account set up. All you got to do in order to get started is click the link in the description box below. Check out Baselane today. Get your free business bank account set up today in order to operate your business the right way. Let's jump into the content. Now, before we talk about solutions, let's talk about the problem. Over the last few years, most homeowners in the United States locked in crazy low mortgage rates. In fact, the majority of outstanding mortgages in the United States right now has a rate of under 4%. That sounded great until it was time to sell. Now, we got millions of people that want to move. Maybe they need a bigger house. Maybe they're relocating or getting a divorce, or maybe they inherited a property. The problem is, if they sell, they lose that low payment that they had and they walk straight into a higher one. So they're trapped. And what do the experts say? Hey, why don't you stretch that mortgage to 50 years? Now on paper, you might save a little bit, but over time, you're going to pay a huge amount of extra interest. So who benefits from that? Not you, but the banks do. And even housing policy experts are warning against this. Why? Because it's going to put people in debt for a lot longer. So then somebody says, what about a portable mortgage? Let people take their low rates with them to the next house. Sounds fair, doesn't it? But In the real world, our mortgages are securitized. They get bundled into giant pools and sold to investors as mortgage-backed securities. And those investors are expecting a certain interest rate and cash flow on their investment. And you can't just rip loans out of those pools and move them around without breaking contracts and regulations. So while banks and politicians argue over experiments, investors like us are quietly using creative finance to solve the exact same problem for real people right now. So let me simplify creative finance for you. Creative finance just means solving a seller's problems without needing a bank's permission. That's it. You're not committing fraud. You're not doing anything shady. You're working within a law, within a contract, but you're not waiting for Wells Fargo, Chase, or Citibank, or even the government to bless your deal. You're using tools like subject to, meaning you're allowed to take over the seller's payment on a property. You're using tools like seller financing, where you use the seller as the bank rather than going to the Wells Fargos and the mortgage brokers and things like that. You're using wraparound mortgages and lease options and novation agreements. All of these strategies are all about restructuring the terms instead of just accepting what the bank is offering that day. And here's why this matters in this market today. Sellers have great debt, meaning low interest rates, great payments that they don't want to lose. Buyers have income, but they could barely afford a new mortgage, especially at today's interest rates. And the banks are focused on protecting portfolios, not protecting families. And creative finance allows investors like you and I to step in the middle and create win-win situations while everybody's stuck. So let's walk through 5 specific plays you can run in this market right now. First up, let's talk about subject to, meaning I'll take over your headache, you get to keep the rate. Subject to basically means you buy the house, the loan stays in the seller's name, you simply agree in writing to make their mortgage payments. So essentially the title is going to change over to you, the deed is yours, but the existing mortgage doesn't change. It stays in the seller's name, so they get to keep the rate. So who's this perfect for right now? Maybe it's the family that has to move for a job, but they can't afford a double payment. Maybe it's the tired landlord that's fed up with dealing with tenants, but they don't want to blow their credit. Maybe it's the couple that's going through a divorce and they just want the house going without going through a short sale. In these cases, how would you put these types of deals together? Well, let me give you an example. Let's say you have a seller who owes $260,000 at 3% on a mortgage. You know that the principal, interest, taxes, and insurance is $1,600 a month. And you know that market rents are $2,100 a month. So in this case, what you can agree to do is subject to their existing loan. You can give them $5,000 to $10,000 of moving money, and you can keep it as a long-term rental property, or you can wrap it to an end buyer. You've now locked in a 3% loan without begging a bank for approval. Now, what about seller financing, where the property owner can be the bank rather than a landlord? In this case, think about an older owner who has no mortgage on the property. Maybe they're tired of managing the property and they don't need all of the money up front. They don't need it all at one time. Maybe to this type of property owner, you present it this way. I'll give you a fair price, a fair down payment, and I'll send you a check every single month with interest. So for example, maybe you negotiate a deal where the price is $300,000, you put down $15,000, your interest rate in order to beat today's interest is 4 to 5%, and you do a 15 to 30 year mortgage on it. In this case, the property owner is going to get steady income, they're going to have better tax treatment, and 0 tenants. For you, you're going to lock in a rate that you want with terms that work for the deal. Now, what about a wraparound mortgage where you create a spread without a refinance? In layman's terms, a wrap is basically buying a property subject to, and then maybe you resell it through seller financing at a higher price. So for example, you might take over a 3% loan at $260,000 and then sell it to a deserving buyer at $320,000 at 7% interest. So what you're doing is you're not only creating a price spread, you're also creating a rate spread. And ultimately, you'll get the cash flow the difference without putting a new loan on your credit. Now, what about a lease option where you can test drive before you buy? Now, some people can't qualify for a loan today, but they can pay more than rent. They can handle repairs, and some of them just need a little bit of time, maybe like 12 to 24 months to clean up their credit and maybe stabilize their income. In this case, a lease option would be perfect for that type of person. Now, a lease option is basically renting a property with an option to buy it. And essentially, you control the property, you set the future purchase price, and you get to collect money up front, money every month, and back in profits. profits. So basically, you're able to collect an option fee up front, which can range anywhere between $5,000 and sometimes $30,000. You get to collect monthly cash flow and back-end profits, meaning the spread between what you paid for the property and what they're paying you for the future price once they cash you out. And in a market like this, where it's a tight credit market, this type of deal is super attractive. And finally, you have novation, where you can help retail buyers without using your own loan. Basically, a novation agreement is where you partner with the seller. You get the right to improve and market the property and ultimately sell it on the MLS to a retail buyer who's gonna go ahead and get their own mortgage on the property. The original loan that the property owner has gets paid off at closing. You never take over the property subject to. You're simply swapping contracts, replacing the old agreement with a new buyer's agreement. Now, this is perfect when there's some equity in the house might need some work, and the seller can't wait 60 to 90 days to get full market value. That's where the novation agreement can shine. So let's go ahead and compare these options that we talked about in this video. You got the 50-year mortgage, you got the portable mortgage, and then you have creative finance. Now, with the 50-year mortgage, what it does is it keeps you in debt a lot longer. It creates a bigger profit spread for the banks, and it doesn't fix the real issue, which is affordability and flexibility. Now, with the portable mortgage idea, it sounds nice, but it really fights against how mortgages are packaged and sold to investors in the US, which basically means it's going to be slow, political, and hard to scale. And creative finance deals can be done today with one motivated seller. It creates real options for families who might be stuck, and it lets small investors, people like you and me, build portfolios without waiting on DC or Wall Street. So one path keeps you dependent on banks. The other path teaches you how money and contracts actually works. And it lets you use that to serve people. And if you're brand new, and this feels like a lot, here's your homework assignment. Pick one strategy from this video, whether it be subject to, seller financing, lease options, wraparound mortgage, or even novation agreements. Just one strategy. Study the strategy for 7 days. Watch every video that you can find on it. Read articles. Maybe listen to a few podcasts. Talk to 5 sellers this week. You can find them through Driving for Dollars. Maybe contact some real estate agents, maybe some wholesalers. Reach out to tired landlords. It doesn't matter. Just practice talking to these sellers, and maybe you say something like this: if I can make your payment problem go away without you taking a hit, would you be open to something a little different than a traditional sale? And once you have a yes, you can bring every potential deal to somebody who understands creative finance, so you don't have to guess on the paperwork or how to structure the deal. Now, this video is not legal or financial advice. I'm just showing you a real tool that everyday investors like myself use every single day in this crazy market that we have right now. And if you want more deep dives on how creative finance actually works, meaning subject tos and seller finances and everything else that we talked about in this video, be sure to subscribe to this channel, click the notification bell, and leave a comment. Let me know what's on your mind, what questions you might have. If you want one-on-one support, be sure to visit dealprocoaching.com, where we will work with you personally to help you go from where you are to where you want to go in your real estate investing business. Again, like, subscribe, click the notification bell. I'll see you guys on the next one. Take care.